How would you like to diversify your investments by selecting high quality, undervalued dividend stocks in communication sector? Well, this video is all about that. We're going to be introducing two high quality dividend stocks that do pay a dividend over 4%. And these are considered to be undervalued companies at this time. So let's get into it. The very first company for us to review is no other than Telus. It is a Canadian company, but it's also available for investors outside of Canada. In this case, we are looking at it in the New York Stock Exchange, available with ticker symbol TU. Telus began its journey over 100 years ago as a telephone service provider operated by the Canadian province of Alberta, and its wireless network, in fact, covers 99% of the Canadian population, of which over 25% have a mobile subscription with Telus. You notice Telus currently has a dividend yielding 4.36%, has a dividend safety score of 72, making it a safe dividend payer. The last time that Telus increased its dividend goes back to the 2019 to 20, whereby they increased it by 5%. The last trading price for Telus is less than $25 US. In fact, it was last traded at $24.12 USD. Telus has a market cap of $32.5 billion, making it a large cap company. From a stock volatility perspective, Telus has a beta of 0.5, suggesting that the stock is less volatile than the overall stock market. Beta is less than 1 indicates that, and the beta of more than 1 suggests that the stock is actually more volatile than the overall stock market. Looking at additional key metrics when it comes to the dividend payment, one thing that could be of concern is the payout ratio. Here you notice that Telus's current payout ratio is at 118%, and their forward payout ratio is more than 110%. A payout ratio over 100% is not definitely desirable, suggesting that the company is actually utilizing and tapping into all of its earnings to be able to sustain their dividend. However, as we noticed, and as you notice in the rest of the slide so far, it is still considered to be a safe dividend payer, with the projections for the company in terms of its revenue, as well as a number of additional financial metrics that we're going to take a look in a short moment. Telus has in fact paid its dividend uninterrupted for the past 18 years. And in those years, the past 17 of them, they have increased their dividend year after year. Telus pays its dividend on a quarterly basis in the months of January, April, July, and October. Looking at the valuation for Telus, their current dividend yield of 4.36% is about in line with their own 5-year average of 4.58, suggesting that stock may be reasonably valued today. It is also worth noticing that their forward price to earnings ratio of 25.1 is well above their own 5-year average of 17. That could suggest that the stock may be expensive compared to how the market has valued it in the past. We're going to take a look at a number of additional financial metrics to have a better assessment of that. We're not just going to solely rely on the price to earnings ratio, the PE. The forward price to earnings ratio of Telus, though, it's worthwhile mentioning, it is also higher than that of the communication sector, which is at 19.3. Telus's last trading price for the stock is, in fact, the highest price that it had in the past 1 year. In fact, today the stock hit its 1-year high price. The lowest price range for the stock in the past 1 year, though, was at $19.93. Let us take a look at additional financial metrics. Earnings per share is one of those key ones that we always would like to see. Ideally, we'd like to see that the company continues to increase its earnings per share year after year. While it's not exactly that continuous ascending trend here. For example, in 2020, you'd see that the earnings per share for Telus had a considerable drop, but of course, we know that that was the year of the pandemic. It is showing signs of recovery. In fact, the next 12 months, the earnings per share for Telus is estimated to be at $1.20, which is actually improved compared to that a few months ago, where the estimate was at $1.19. So that's a positive note there. In terms of outstanding shares, we'd like to see the company that over time buys back its own share and reduces its shares over time. It actually has changed since 2019. The trend has reversed, and actually Telus has started to issue new shares. In fact, in the last 12 months, they are showing 1.33 billion shares, which is the highest that they've reported and had in the past 10 years. Let's just take a look at total sales. Here, we'd like to see a nice steady growth. And in fact, that's what we are seeing in the last 12 months. In terms of the total sales, Telus is showing $16.4 billion, which is remarkable and the highest it has had in the past 10 years. Lastly, in terms of return on equity, which is a measure of how many dollars of a profit a company earns for every dollar that shareholders have invested, you're noticing that here the ideal is for telecom companies to be above 11%. In the last 12 months, it is less than that, so it's not as desirable. And nonetheless, it is fairly close to that threshold of 11%. And in many of the past 10 years, in fact, pretty much all of those years, they have already either reached that standard threshold or surpassed that. We are now going to take a look at the stock in terms of the return for it in terms of the stock price. This does not take into account the dividend income that you would have earned. It's just solely based on the stock appreciation or depreciation. In the past 1 year, the stock of Telus in US dollars was up by 15.68%. And in the past 5 years, it is showing a cumulative total return of 46.45%, which is quite decent and a nice return. Knowing that you can also add your dividend income to that, just even make that return even more lucrative. Next, we're going to take a look at analyst estimates based on different sources. Analysts on TipRanks, 7 of them covering this stock, have all of them have a buy rating, resulting in a strong buy with a 1-year price target to be at 26.2 cents. This is the average price target. And if that holds true, that shows an upside of 7.88% based on the last trading price of this stock. In terms of analysts on Yahoo Finance, they are showing and estimating a 1-year price target of $25.86. And lastly, analysts on Simply Wall Street, where they analyze the stock from a fair valuation perspective, give this stock a fair value of $62.99, suggesting that the stock from an intrinsic fair valuation is undervalued by 61.7%. Before we move on and take a look at our second pick, I have a big favor to ask you. You notice that I've put a ton of time and effort to actually put this video together and analyze it for you. So I appreciate it in return if you give this video a thumbs up and subscribe to our channel for more investing and finance videos. Thank you. Our second pick to review is Verizon, another undervalued communications stock. Verizon was formed in 2000 when telecom giants Bell Atlantic and GTE merged in a $52 billion transaction. Verizon does pay a juicy, nice dividend of 4.76%, and its dividend considered to be very safe with a dividend safety score of 87. Verizon has a market cap of $226 billion, making it a mega cap. And the last trading price at the time of making this video was at $53.79. From a stock volatility perspective, Verizon is also very low volatile, with this beta of only 0.37%. The last time that Verizon increased its dividend goes back to September of 2021, where they increased it by 2%, suggesting it was a very slow dividend growth. Looking at the payout ratio here, for Verizon, we are looking at much safer payout ratios, only at 47%, which is considered very low for telecoms. And that's something we like because it gives the company a ton of room for it to grow its dividend for many years to come. And what's noticeable as well is their dividend streak. In fact, the past 31 years, Verizon has been paying its dividend. And in 15 of those years, they have increased their dividend year after year. Verizon does pay its dividend quarterly in the months of February, May, August, and November. And currently, they have an annual payout of $2.56 per share that investors have. Looking at the valuation for Verizon, their current dividend yield of 4.76% is about in line with their own 5-year average of 4.44%. What this suggests is that the stock may be reasonably valued today. It is also worth mentioning that their forward price to earnings ratio is totally the opposite side of the spectrum. It's quite low. It's only at 9.8, well below even their own 5-year average of 11.8. This sometimes suggests that the investors may have become pessimistic about the stock and are not as optimistic. Nonetheless, for value investors, this could still be a good time, but we want to not just rush into that decision. We want to look at additional financial metrics and have a better assessment. But before we do so, let us take a look at the 52-week price range. the last trading price for the stock is somewhat hovering between the 52-week low and the 52-week high price for the stock. Next, we're going to take a look at additional financial metrics. Earnings per share, as indicated earlier, we'd like to see that nice steady growth. Well, it's not always steady growth, but at least we kind of see, if you step back and zoom out, we see that upward trends for the stock in the last 12 months. They had earnings per share of $5.40, and in the next 12 months, they're even projected to improve that by about 1% to reach $5.47. Outstanding shares, we'd like to see this number declining. In 2014, you'd see they definitely issued additional shares, and in the last 12 months, they are showing 4.15 billion outstanding shares, which is the highest that they've had in the past 10 years. In terms of total sales, the sales have been increasing, but not as aggressively, and probably that's one of the reasons that the investors are less bullish and maybe not as optimistic about the stock as, let's say, for example, Telus, which was growing much faster at a much faster pace. Here in the last 12 months, Verizon was having $134 billion in outstanding in terms of the total sales, which is equivalent to that of their 2021. In terms of return on equity, lastly, well, we mentioned that for telecoms, we would like to see above 11%. Verizon is knocking it out of the park with a return on equity of close to 30% in 2021, as well as in the last 12 months. Let us take a look at the stock return in the past 1 year and the past 5 years. In the past 1 year, Verizon stock has returned negative 2.45%. And in the past 5 years, they have provided a cumulative return of 9.82%. Definitely not the most amazing return in terms of stock price. Nonetheless, keep in mind, in the meantime, you're earning that solid dividend that they've been paying for 30 plus years. Next, we're going to take a look at analysts. There are 9 analysts covering the stock on TipRanks. 4 of them have a buy rating, 5 of them have a hold, giving the stock a moderate buy, with the price target for 1 year estimated to be at average of $60.44. And if that comes true, that shows an upside of 12.36%. Analysts on Yahoo Finance have similar estimates with a price target of $60.19. And lastly, analysts on Simply Wall Street assess the stock and give it a fair valuation of $196.88. And they suggest that this stock is currently undervalued from a fair valuation perspective by 72.7%. There you have it, folks. A quick look into 2 undervalued dividend stock in communication sector that would be good options for investors to consider to buy or watch right now in the stock market. While we have put a ton of time and effort to put this video together and research these stocks, we do, of course, encourage you to do your own research and make sure you assess your own risk tolerance before buying these stocks or any other stocks that we talk about in any of our YouTube videos. If you have any question for us, let us know in the comment section down below, and let us know whether you are invested in any of these stocks for that matter. I hope you enjoyed this video. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video. And of course, subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, real estate, or crypto, as well as ways to reach financial freedom. Thank you, and we hope to see you next time.